Welcome to GEPL Capital's another market outlook video. I'm Sanket Bendre from the Fundamental Research team, and in today's video, we will be discussing over the last fiscal year, that is FY26, what exactly happened and how to look forward in the upcoming few months. So let me share my screen and we will start the video right ahead. Uh, Now I hope my screen is visible. Yeah. So as I mentioned, that we will be discussing like some of the key pointers that happened in FY 2026. So if we see. So basically, it is an annual review of FY 2026. So if we see the global growth held up better than expected despite elevated trade policy uncertainty, India's real GDP grew by 7.6% in FY 2026 itself, whereas the IMF projects global growth at 3.1% in 26, with WTO forecasts merchandise trade slowing at 1.9%. In this slide, we will be discussing some of the India's macro fundamentals, which are broadly constructive, with real GDP growth coming at 7.6% from 7.1% in FY 2025. Similarly, if you see fiscal deficit came at 4.3%, which was as expected in the range of RBI's policy. Then CPI inflation came at 2.1%, which is at a multi-year low compared to 4.6% in FY 2025. And the forex reserves were at $697 billion as of April 3rd, 2026. So some of the policy support and pressure points includes liquidity measures totaling at 13.8 lakh crore, with INR depreciating at 9.9% and merchandise trade deficit hitting a record of $334 billion. Further, there were imbalances between deposit and credits, which weighed on the banking liquidity. As a result of that, we saw RBI taking some of the measures to improve the liquidity in the overall markets. So in this slide, we'll be discussing the monetary policy and economic activity in the three phases. So the first phase included an rate cut of approximately 100 basis point over the months of April, October, and December. In the phase two, the RBI Monetary Policy Committee maintained a status quo of 5.25% of the repo rate with a neutral stance. And in phase three, we saw the inflation was revised to 4.6% for the upcoming fiscal year, that is FY 2027. So this increase in inflation rates come amidst the increase in crude oil prices due to the ongoing war situation, the tariff uncertainty from the US's side, and the slightly moderation in growth across most of the sectors. So as a result of that, we are for and that the base of the inflation was lower in FY26. So all these parameters is leading to a revision in the inflation for FY 2027. So as I mentioned, that MPC maintained the repo rate for a third consecutive meeting at 5.25% and is projecting a growth of 6.9% with an inflation of 4.6% for FY 2027. So, a global as well as Indian domestic market roundup for FY26 includes Nifty 50 ended lower at 5.1%, with March month seeing the sharpest fall since 2020 at 11.3%, whereas DIS offset. This impact was offset by DIS with a record of 8.5 lakh crore of inflows and SIPs generating approximately 29,132 crore per month in FY26. However, on the global front, if we see MSCI World Index jumped to 17.4%, where the emerging market index was at 26.9%. But it fell slightly. It fell at 30.3% in the month of March. However, on a overall basis, FY26 was positive for the emerging markets, especially markets such as KOSPI, Japanese market, as well as Chinese market. These are some of the key leading markets in FY26. So it is the KOSPI market itself increased at 103.6% in FY26, with Japanese Nikkei market increasing at 43.4%. On the FPI and DIS flows, so FPI, we saw a record of FPI outflows at $19.7 billion in the March alone. The FPI's outflow was at $12.7 billion. However, to offset that, DIS bought for 32 consecutive months, pushing the foreign selling pressure. On the bonds market, US 10-year bond ended at 4.3%, which is 11 basis points on the upper side. And similarly, India's 10-year bond yield also increased by 46 basis point at 7.303%. So on the commodities trade and currency side, if you see on the commodity side itself, crude surged 63.1% on a month-on-month basis to $120 per barrel, with an annual gain of 58.3% on the West Asia supply disruptions. Gold saw a negative at 12% month-on-month, but 48% on a year-on-year basis, and still similarly silver on 120% on a year-on-year basis. Similarly, other metals such as copper, aluminum, as well as agricultural prices also were on the positive side in FY26 itself. In FY26, if you see at the currency market, the INR depreciated by 9.9% in FY26 with 4.1% on a month-on-month basis in the month of March itself. So all in all, this was what happened in FY26 itself. And for FY27 outlook, the ongoing West Asia crisis, below normal monsoons, and elevated inflation risks should lead to growth inflation balance. The key policy determinant that will be the key thing to watch out for due to the West Asia crisis, below normal monsoon season, and the rising inflation parameters should be some of the key parameters to watch out for in the upcoming months. So I hope you like this video and do hit like, share, and subscribe GPL Capital's YouTube channel. Thank you.